Hey everybody, Boris. Welcome to the weekly technicals for majors for euro dollar, dollar yen, and pound dollar, March 27 through March 31, 2017. The question ahead for us, dollar trouble. Has the dollar really started to turn now as political woes begin to plague the Trump administration and translate into perhaps some economic weakness as we go forward? Certainly end of the week with the collapse of the healthcare bill and the very, very weak political standing that's left the Trump administration in has had some negative impact on a dollar, but it's not very clear whether that's really going to have any kind of long-term effects. As we go forward, the economic calendar is actually extraordinarily quiet this week. We don't have anything on the data set on the U.S. side except for final GDP numbers, which are unlikely to be very different from what they were in the second reading, and consumer confidence numbers. Those are two things that just perhaps could have a small dent in the U.S. economic impact. But of course, we're also going to start getting quarterly numbers, and that is actually probably going to be the single biggest impact on whether the dollar stays up or down. If equities begin to start to slide, this is the key thing. If equities begin to start to slide, risk aversion will drive dollar yen especially to the downside, and that indeed is going to be the single biggest determinant. Not anything on the economic calendar this week, which looks to be very, very tepid as far as the U.S. side goes. On the European side, the euro is holding up well. IFO coming up tomorrow, actually, or tonight, and that certainly could have some very big impact, especially if it's positive, because it continues to show that the euro economy is recovering better and perhaps may even challenge the U.S. economy as far as growth goes going forward. And on the UK side, the central event this week will be Brexit. And Brexit, of course, is a very interesting story because, in a sense, in many ways, it is essentially old news, right? At this point, the market is completely and totally factored in all of the Brexit stories that could possibly impact us on the short term. The much bigger question is going to be long term, and we'll take a look at that in a special report that I'm going to publish for you guys in a day or so on the longer term impact of where Brexit could lead the cable. But in the near term, frankly, the trade in cable could actually be more to the upside than to the downside as the short squeeze continues to play out. A couple of things on the UK side, aside from Brexit, of course, will be the current account data. That'll be interesting to see if that improves or declines, and nothing else really on the red side as far as major important economic data sets this week. It's generally actually a very, very quiet week. Let's take a look at the basic support resistance levels, and then we'll take a look at the charts and just see how everything stands. So euro looks quite good and actually looks very well supported, this 107 level. A break above the 108, sort of with conviction, sort of 108.50, really puts us on path towards a very, very strong move towards the 110. That, in conjunction with a weak dollar move, could be the combination that could push us there. I don't think it's going to happen this week, but certainly the path higher seems to be the much more likely path at this point. Dollar yen has gotten battered all the way through. Every single high has been a failure. And now, in many ways, any risk aversion flows. In other words, we get a 1% more move in the S&P to the downside, maybe even a 2% move to the downside in the S&P. The 110 figure is literally a foregone conclusion. I would be shocked if 110 isn't tested on any kind of a risk aversion sell-off. And that's really the biggest risk to the dollar at this point. You would really have to have a complete turnaround of fortune, a belief that the stock market will sort of refocus back on tax cuts, and belief that the Trump administration can repivot itself towards a more productive economic policy in order to see the dollar start to get a short covering squeeze in dollar yen. The near-term trade seems to be very much sell the rallies into the 110 support, which is really going to be tested as the week progresses on any kind of risk aversion flows. And cable, relatively quiet now. Hard to say exactly what the trigger will be off the Brexit. It could just very well be, I think, much ado about nothing. But ultimately, cable does look to be more of a squeeze to the upside to the 26, 27, where there is a lot more resistance as we go forward. Let's just take a look at the charts here and just see how everything sets up. So euro looks quite strong. It's got a very, very nice W bottom, higher low on the W bottom. This 108 definitely big resist point. I mean, certainly we're not out of the woods yet. You could make a case here that if dollar strength suddenly comes in, the euro turns back, it really could go all the way down to the 106 level. But so far that it's really holding. To me, the critical level technically here is the big breakout candle which we had a couple of days ago. The low in that breakout candle, about 107.20 or so. Let's just call it 107. Let's just say that as long as 107 holds this whole week, even if we don't make any further upside movement, the bias remains to the upside. That's really the critical thing. The bias looks to be the upside with a 107 stop or a stop below 107. That's a very likely trade. And if it does push us higher, then the move through this 108 level really opens up the run all the way up possibly towards this very, very key 110 figure, which we haven't seen since the end of last year. So euro looks very constructive in the near term. Dollar yen, on the other hand, looks the exact opposite. If we pull up the dollar yen, we see that, yes, we had a minor recovery, sort of a relief rally as we tested, 108, 110, right in front of the 110.50 level, 110.68. But I don't know if we're really out of the woods yet. I think the dollar yen trade looks very, very vulnerable here to more downside. We could squeeze up to 112. The breakdown really was around from 112.50. So the true positive move in dollar yen, the move that would negate a huge amount of this negative sentiment and negative trend, would be a close above a 1250 level. Until that happens, you sort of have to assume that every rally is a sell, and 110 becomes much more a viable test here. Because on a longer term basis, what you're seeing is just a continuation of failure. Lower highs, lower highs, lower highs, lower highs, culminating perhaps with a break, sort of a cathartic break through the 110 level as risk-off flows continue to dominate this trade. And pound dollar, of course, its own story very much this week, and it's definitely triggering off the Brexit story. It is encountering some resistance here at this 125 level. That's going to be very key. We'll see how well it trades. I mean, I think the interesting thing here is, if the Brexit trigger squeezes us past 125 as a sort of a sell the news trade, then we easily could squeeze all the way out to the 127. 26.27 is the much stronger resist point here. And that's really where the low risk shorts will come into play, because at that point I think it's going to be much harder for cable to overcome this this move. Having said this though, this 125 level is key. If we kind of get turned away from the 125, then a Brexit could really push us just sort of on a test level down to 122s. Still though, to me, the trade right now is not a short. I like a short in the 26 or 2800s, but over here it's a really dangerous short because of the short squeeze that could happen into the zone. And any kind of a sell-off here looks very late. Looks like it's going to be a tired sell-off because you don't have any fresh catalysts really for quite a while. In order for cable to truly collapse, you have to have evidentiary evidence from economic data that's going to take quite a long time to develop. In other words, perhaps maybe 3 to 6 months for us to see just how badly the impact will be, and more importantly, how tough the negotiations will be with the European Union. If the European Union really plays hardball and forces UK to pay massive amount of reparations in order to basically escape from the Union, that both economically and politically is going to be very negative cable. But we'll have to really play it out. To me right now, the trade looks much more to the upside than it is to the downside. This is a small correction within it. A move below 23.50 could possibly push us down 22, but still, this 22 level is a very, very core support level. So I'd be very shocked that we break it. To me, cable is much more of a buy to dip trade right now than it is a sell to rally trade. Whereas dollar yen is very much a sell to rally trade than it is a buy to dip trade. And that's how it sets up in the majors as we go into this week.